Thank you for joining us. I want to tell you you're in the right place. This is going to be an outstanding panel. We have three brilliant speakers joining me here. So I'm going to start on the far left. That is Dharmesh Mistry. He is CEO of AskHomey, and which is a prop tech company, but he was a long time at Temenos, so he's an expert on many fields within fintech, including core banking systems. To Dharmesh's right, we have Ove Kreison, who is the CTO of Tuum. Tuum is a core banking system. It's a next generation core banking system. We're going to come back in a second to describe what that actually means to be a next generation core banking system. And then to my immediate left, we have Andres Kitta, who is the Deputy CEO of LHV UK. And again, we'll come back to LHV UK because it's probably, or maybe not, a bank that you've heard of, but it's a bank that powers a lot of other banks and fintech companies. Over 200 fintech companies run on LHV UK. So yeah, it has a very significant role in the UK fintech ecosystem. So, right, we're going to kick off. And Ove, I wanted to start with you because this panel is all about how modern core banking systems can facilitate new revenue opportunities and new business models. But I wanted to start by asking you, what do we mean by a modern core banking system? And in particular, you hear a lot of people say that the term cloud native. What does it mean to be cloud native?
Okay, so modern core system is still the same as every other core system, but there are quite different nuances there. So first is that it has to be easily integratable, meaning API first, so that on the other hand, it needs to be flexible, so that you support different types of business models, not just your let's say daily banking, but everything that comes with it. It needs to include a lot of trust and security in it, because at the end, banks are putting enormous risk on you, meaning all their business data is, inside of the core. And on the other side, as you said, the cloud native part, which should be the standard. And what cloud native means is that you are using all the capabilities of the cloud in a sort of seamless, flexible manner. Because let's say previous generations of core systems, they were built in a manner that they were like one big system that runs on dedicated hardware. But in the cloud, you actually have to be ready that the cloud sort of changes servers, switches around, so that you can always heal yourself and also benefit from the enormous workloads that you're having on top of it.
Fantastic. And Dharma, I wanted to come to you next because, so we sort of now understand the difference, right, between what we might call a traditional core banking system that's monolithic versus a new core banking system that, as Ove describes, is microservices based and API first and so on. But to what extent does that still really matter? Because, a core banking system is a record keeping system, it's a back office system, and all the action, if I'm not wrong, is in the front office, is in customer interaction and digital experiences. So to what extent do we really need modern core banking systems to power new revenue opportunities?
So basically, core is core, right? It's an accounting engine, but the real differentiation comes at the front end with the distribution system. So you're absolutely right. But to enable that, you need a couple of things. Firstly, you want to now compete. If you're just going to launch another loan, what's the differentiator? Is it the rate? Is it the charges? That's what all banks have been competing on before, right? But now they're competing on experience is one of the things, right? And that experience is a front-end thing. Some of those things will be enabled by innovation. And that's really where I think a modern core really matters, because it can start to enable innovation. How does it enable innovation? Well, firstly, it provides rich access to financial data that is important to non-banks, right? So everyone kind of thinks that, I'd say outside of the industry, we think that open banking was for fintechs and banks, and that was it. It's actually for everybody. It's for every single organization to drive efficiencies in customer journeys, right? So if we think about Uber, one of the big things about Uber was that you didn't have to take your wallet out and count the change and work out a tip, etc. It was all part of the journey. They revolutionized the ride-hailing journeys, right? And that's the capability that's being offered to any company by exposing financial data through a modern core. A legacy core would be a little bit more difficult to get access to the data. We know open banking made that a little bit easier. But it's not just about that data itself, because actually open banking gives only a very small subset of the data, and there's a much richer data set, right? And another kind of fallacy is that this data can only be used, to understand someone's financial picture. But actually, all banks know that, most of this data can be used to optimize any kind of journey on a broader sense. What's their lifestyle, what's their aspirations in life, etc. We can work all this stuff out by looking at the patterns of spend that they have, and that doesn't have to be left, to the remit of the banks. And that's, the problem for banks is they can't innovate all of these experiences, and that's why open banking really succeeded, because it allowed so many more companies now to leverage this data and design experiences, for niche audiences. It's not something that banks can do, because what they're used to is scaling up for the mass market, right? So, I mean, yes, we need to have a modern core banking system. The main thing that I think it allows a bank to do is to scale innovation, because they can't scale it on their own, right? And by exposing functionality and data, it really allows them to scale innovation, right? It's no longer them having to deliver new things to new customers all the time. It's now all these third parties, and like I said, it's not just fintechs, it's the broader market.
Fantastic. So that's a really nice segue to talk about LHV UK, right? So as I mentioned in my brief intro, I'm guessing that a lot of people may not have heard of LHV because it's kind of a power by type setup. And you're running, as I recall, or more than 200 fintechs are running on top of LHV. So can you talk to us about your business model, and to use Dharm's parlance, can you talk about how a modern core banking system has enabled you to scale innovation?
It's a great question. LHV provides payment infrastructure and accounts infrastructure to 200 plus fintech customers. To facilitate this, we need to have a really good technology, because like all fintech companies, they expect their partners running modern technology, API-based, microservices-based, cloud-based banking platform. It's not possible to work with really old systems and building very innovative products on top of it, especially if you're talking interaction between two organizations and one being heavily regulated. Therefore, you need to reduce the friction between the parties in the chain, and you need to have really good platform. We were really lucky to start providing fintech infrastructure services in 2014. All our customers have actually taught us something, and this enabled us to build a journey to improve our own platform as well. We at the moment running our platform, which is home built, but one of the key things is that as a bank, you don't need to develop everything by yourself. There is no point building commodity processing in-house, because engineering resource is extremely expensive. And as earlier said, we should focusing on the competition advantage, the things which make difference to our customers and to the fintechs, and that all relies on API side, cloud-based, cloud-native processing, etc., etc.
And Dharm talked a lot about the ease with which you can extract and open up data. What other characteristics would you say are really important?
Well, I think real time is actually underestimated problem that banking has, because if a lot of banks running the core banking platforms, they are not meant for real-time processing. So we have faster payments for 10 plus years in UK. Euro SEPA Instant is now spreading very quickly. And if your core system is not able to process everything your customers need in real time, it's a big issue. Also, compliance works. If you build a good risk tools on top of the, say, mainframe-based core banking, you may be not that fast as you should be nowadays, because fraud is becoming more a big issue. APP fraud is really big issue for banks. They need to build really fast really efficient fraud tools as well. So data and the real-time processing.
So we said data, we said real-time, we said risk management. What about security?
Yeah, resilience. I think we all know that PRA fined former CIO of TSB because of TSB failing to run resilient services for customers. I think that's also very important. So you can overcome those problems when you're running on cloud and also very modern platforms. So yeah, and security is very clearly related to that. Of course, it doesn't disappear with moving to cloud, but still, the cyber attacks, what happening at the moment, every day, you need to be just ready, and you need to work with the vendors to build a solid and secure platform.
Fantastic. Okay, so we're going to move on now to talk a bit more about new business models. And so, Dharm, I'm going to come to you next, because everybody's talking about banking as a service. And we have here an example of, a very successful example of banking as a service. You talk a lot and you've written a lot in your blog about banking as a service. When you speak to incumbent banks, when do you think strategically it makes sense for them to think about banking as a service?
The short answer to that was yesterday. If you're not already on that journey, you need to be on that journey, right? And for big banks, I mean, it's fairly clear what's actually happened, post kind of open banking, which started in 2013, is that it's forced a separation in manufacturing and distribution. Banks are providing the manufacturing capability to create loans, deposits, accounts, etc., and then other people are allowed to distribute off the back of that, right? So now you could say that if we follow that principle, then it's only the big banks that will survive in BaaS, and that could be true, and that's certainly the pattern that we're seeing, is that big banks will take a scale, the economies of scale factor to manufacturing in financial services. So does that mean that small incumbent banks shouldn't get into BaaS? I think the answer to that is no. If the small incumbent bank is just going to repeat the past, which is I'm still offering loans, credit cards, etc., the same kind of products, you can play with the rates, etc., not really fostering any innovation, then I don't think it's a play, right? But if they can find niches, right, and bring those niches to bear, then I think it allows them to provide a BaaS that, again, a scale provider is not going to be able to differentiate on, based around the niches. So, for example, if I look at like Oak North and what they're doing with lending for businesses, then it's a big niche, right? But where best to start is a big niche, right? Now, obviously, digital allows you to create bigger niches than the physical world. So you could take, every publisher, author, content writer, etc., and that would be a niche, right? Or you could take, every supporter of a football club, and that could be a big niche in itself, right? So the niches are just specialized audiences. It's not a smaller customer segment, right? But I do think if a small bank wants to get into it now, they're going to, A, they should do, and B, they have to find that niche to make it viable. Otherwise, it's going to be the big banks game based on scale. The other thing to differentiate, I guess, is the countries, right? Because each one of these providers will have to, conform to local tax, local regulation, the currency, the language, etc., right? And some banks will be able to do it for their locale, and as we're seeing in the UK for things like, Moniz and a few others, right? And then some banks, we're starting to see do this on an international basis, on a country basis, like people like Standard Chartered, right? So, the locale is also a competitive stance point, and there are many countries that are well behind on the BaaS space, right?
But just to dig a bit on locale, so if you're a large incumbent and you have a very big own label distribution capability, do you think it sometimes makes sense to launch BaaS in a market where you're not so strong, so there's less sort of cannibalization risk?
No, because I think to some extent you're going to cannibalize anyway, right? So I think you kind of have to do it in your own country before it gets done to you, right? And that's the issue.
Ove, I wanted to come to you next. So in the conversations you're having with banks, Where are they focusing their efforts in terms of generating new revenue opportunities or starting new business models? Is it BaaS, as Dharmesh has been talking about, or are there broader conversations happening?
I think the general theme is sort of embedded finance and embedded lending mostly. So getting closer to the sort of point of sales, getting part of the processes, getting closer to the merchants. So this is the main theme sound. BaaS is also quite, I would say, quite relevant. But on the other hand, BaaS is a bit different because in the case of lending, they can use their same risk models. They know how things work. On that sense, BaaS means that you are completely shifting your business model, that the risk is different, how you evaluate it is different, the revenue streams are different, so that it also means quite a bit of change. Good thing is that, like, technologically you can enable it, which means that the sort of getting over this boundary is easier. But on the other hand, banks also internally need to do quite a bit in that sense. So it's not that I will think a bit and then go into the banking as a service business, but it's rather quite a planning effort in their regard. But lending, that is the sort of, well, usually the sort of easier route. And the other side is definitely moving more into this sort of, well, if you're a retail side operating bank, then mostly moving to, like, let's say either SMEs, taking some, let's say, corporate products here, including maybe, let's say, a variety of services like invoicing, accounting, that sort of things into the game.
And just when LHV decided to create LHV UK, which is a banking as a service offering where you don't have your own brand here in the UK, how did that decision come about? Because I mean, you were quite an early mover, and was it a bit like Dharmesh was saying? Was it a case of in Estonia you had a full service bank, direct to consumer bank, and so in the UK this was kind of a greenfield, and you could look to create a new sort of business model canvas?
LHV moving to the banking as a service, I think it was quite logical part of the DNA. So LHV as a bank is not old, so we are a bit more than 12 years old. It started as a retail bank with a very significant focus on digital offering. Now, the digital offering meant that we actually had at that time quite modern infrastructure. And at that time, we saw a significant increase, the first probably large increase in fintech market as well, because FCA opened up the sandbox. We had the EMI regulation, which actually fueled a lot of the fintech kind of movement at that time, and then investments as well through the VCs. And our first customers turned to us because we were a quite modern bank, and it wasn't like a very strategical decision we made at that time. But as the customer base grew, we understood that this is what we need to invest more and build our specific capabilities around BaaS offering. We started in the Eurozone because we were direct members of the SEPA schemes. And then we understood that, well, we can't serve the fintech industry if you're not in London. And I think 2017, we made the decision to move to London and opened up a branch. And now we're in the process of establishing a separate bank in the UK, which will take over the whole banking as a service offering from the Estonian bank as well. So it has been a learning journey. At the beginning, it was kind of coincidental decision, but now it has been a very clear separate investment into specific knowledge. And I think it's right in terms of risk management that you really cannot build the banking as a service as a backbone of retail offering, because the risks you're taking, they're completely different. You're actually relying a lot on the risk management of a customer, and that puts the bank completely different position, and it puts a bank completely different position also in front of the regulators or supervisors. And you would see completely different scrutiny from your regulator when you're running a banking as a service business, when you serve different fintechs, or as they say, nested flows, nested payment flows. And that's why you need specialized knowledge, specialized tools, and also platform which is capable of supporting this.
And just to give, if you don't mind, give us an idea of the sort of scale at which LHV UK operates. Because I guess anybody who's thinking about BaaS has to weigh up the time to market, right, of building your own brand and creating the distribution capabilities versus leveraging an ecosystem to the same goal or to the same end. So talk to us a bit about how the scale you've reached and the time you've been operating here in the UK.
Well, things can take a long. I'm not starting to tell the stories how complicated it is sometimes to get integrated to the payment scheme, and I think for us there has been some journey, because we made a decision to move to the UK before Brexit decision was made, and obviously after the Brexit decision, all the areas or processes what the bank supposed to do were more complicated. I think it took about 12 months longer for us to join faster payment scheme, and similar happened with the BACS payment scheme, that it took about 1 year longer than we were planning. But I think if you look back what we have achieved in Euro, where we actually more longer operational, then quite quickly, with thanks to our customers, we achieved sizable payment flows, and at the moment we assess that we are processing about 7% of total Euro real-time payments.
Wow.
Well, it's thanks to our customer base, and Eurozone real-time payments just picking up, and I think in that sense UK has been significantly better market for fintechs, because the payment services and related services are significantly more developed compared to Europe. Europe is lagging behind, but thankfully follows quite quickly. So we see a lot of good initiatives in Eurozone also happening, which are quite common in UK, for example, payment, confirmation of payee, etc., etc. So this is something which is really good in UK.
Fantastic. Thank you very much. So we're going to move on to the next section now, which is about getting sort of practical with core banking. But I just wanted to say that we can take questions from Julius. I think there is a mic if anybody wants to ask a question. The mic is there. Because I'm not sure how it works with this silent. I've never been in a silent conference before, but yeah, if you kind of raise your hand. And
if you can get the mic before you ask the question.
Yes. Okay. So I'm just going to ask one more question. Oh, we have a question here already. Okay, good.
Hello, can you hear me okay?
Yes, very well.
It's Armin here from Driverly and InsurTech Business. My question is, what is next after open banking and open finance? Do you see open insurance happening anytime soon? Open connected car data coming in the next few years? What is next after this? Thank you.
Okay, that feels like one for you, Dan, at least to kick
I'd
us
love
off.
to answer that question. So the challenge that we have in the UK at the moment, as far as I see it, and there is an open data kind of initiative going around in the UK, but the problem is that we've got open energy, we've got identity, we've got open finance, we've got open healthcare. All of these initiatives are happening independently, right? And in each scenario, there are very different problems, and some of the stuff that I'm doing in the property world kind of highlights the real complexity, because with open banking, it's really a case of we trust the bank's data, just give us an API, and regulate that process, right? In property data, you've got many different sources of data. You've got then the key problem is about exchanging that data and allowing somebody else to trust the source of that data. So you've got to have provenance of the data as well and prove it. You've got to keep the history of any updates to those data elements. I mean, it's way more complex. So really what we need is an overarching open data strategy that kind of says, right, this is the right way to do identity for data. This is the right way to provide provenance. This is the right way to version the data, et cetera, right? And then filter it down to the different industries to expose their data sets, right? But that's, that would be Nirvana land, right?
Can I follow up? Very quick one. With open banking, I suppose the regulatory push opened up, and it almost made the big banks to open the data to others as well in the interest of the customers. With all the other open data initiatives, in different sectors. Do you think it's going to work without a regulatory push, or do we need it has to be from the regulatory side of things?
It will still, I think, when it comes to financial services, for sure. Probably things like healthcare as well. So in some cases, very much so, but certainly in the space that I'm working with now in property, we're learning from open banking and saying, well, look at the level of innovation that occurred here, right? You as an organization can't drive that level of innovation. You certainly can't provide to the customer in the niche ways that they want to. So we kind of see the benefits of it, see success, and we're building on top of it, right? So I think regulations will be required in some places, but not everywhere. But what is required, I think, is some standardization on an open data initiative, right? I mean, if you look at like the pensions dashboard, well, that's almost run in parallel to open finance, which hasn't really gained a lot of legs, right? And it's kind of like, well, and like you say, where's open insurance, right? Why haven't insurance come in? The closest you've got is this shared claims database. That's about it. But there's so much more that can be done, right? Good question. Thank you.
Okay, right. So if you have questions, please let us know. But I'm going to ask a bit about core replacement. So from 3 different perspectives here. So starting with you, Ove, on making the business case for core banking replacement. So as we know, nobody wants to replace their core banking system. These are very complex systems. They're at the heart of the institution, you know, and there's a lot of risk in changing these systems. So how do banks make the business case? Is it around new revenues? Is it around cost savings? You know, what risk factor do banks apply to this kind of business case decisioning?
Well, it depends a bit on the bank and what their background is. Mostly it's revenue driven, so that what new revenues they can unleash if they change it. If it's like a very old system-based bank, then of course there is the cost issue also, that let's say your vendor is not supporting you anymore, or the vendor has been extinct or whatever, or your internal systems, nobody knows how they work. So then there is a bit different driver. But like sort of cost-wise also, that what they usually at least do is that they want to sort of move from the sort of CAPEX cost to OPEX, which means that the cost structure should actually reflect the revenues also. So it's not that you will just increase revenues, but you also want to play around with the cost structure. And as Andres also said, then you're not maybe even like balance sheet wise saving costs, but you're actually moving the cost to another area, meaning that you're not taking care of the commodity anymore, but you're taking care of what distinguishes yourself. So that you're still keeping the engineering efforts, but you're just turning them into the area where you actually make a difference.
Andres, I wanted to come to you next, because in my experience, people when they talk about core replacement, they say you've got, you know, broadly speaking, 3 options, right? You've got the rip and replace, where you replace your existing system, and which nobody ever seems to want to attempt. Then you've got the sort of build and migrate, where you create the sort of what people now call a sort of engine 2 bank, and then you migrate the services over to the engine 3 bank. Or you've got a progressive renovation, where you gradually sort of replace parts of the existing core banking system. LHV is kind of unusual in the sense that you went for the first one, right? You've done a full core banking replacement migration. Given how unusual that is, how did you do it? What are your sort of lessons learned? What advice would you give to any banks sitting here in the audience that would be thinking about doing the same thing?
First of all, we had very great opportunity to do so, because as we're going through a completely new licensing process and establishing a new bank in the UK, although we have existing business, it was a good time for us to reconsider what is our IT and platform strategy. And quite quickly we understood that although we have good in-house built, special purpose-built platform, we actually need to optimize how we are building our platform. And that's why we went through RFI, and we invited, I think, 5 different vendors. We selected our preferred partner, and we had opportunity to build a new platform while running existing business on different platform. The platform is live, but we have not fully concluded the migration yet, but we will do. And there are a number of reasons why we did this way. I mentioned the engineering cost. I think we all know that demand for good engineers is only growing. The expense of the engineering is going up. I think you don't have much difference anymore between different regions where you develop your core platforms. And honestly, legacy systems actually created faster than we would like to think. So we need to refactor all the time our platform. And while selecting a BaaS service provider or vendor-based core banking solution, I really hope that I can share the refactoring cost with other banks who are running on the same platform. And secondly, the technology is always changing. Our platform is 12 years old. It's a bit old for certain things. We need better and more modern, more modular, more microservices.
A lot of banks are running 40, 50-year-old systems.
Well, yeah. And combining all those things, it was quite a reasonable decision to do so. But we also kept some of our own applications, which we have special built, purpose-built for fintech customers. For example, our customer-facing API, it was so unique, we didn't want to change it. So basically, we do the migration in a way that our customers' API doesn't change. So, well, everything in the back changes. So we hope that there will be minimum disruption for the customer migration.
And how many accounts are you going to have to migrate?
5 million.
Wow.
And that, you don't find that a daunting?
Well, we think that Tuum will help us, but of course we do a number of rehearsals, and I think the last migration plan has 4 rehearsals built in, so it's a very, very serious consideration, and yeah, we have planned for that. So.
And just one more question. So you said you went out to RFI to select the new core banking system. What were the functional and non-functional criteria that you most prioritized, that were most important in that selection process?
I think it's very different depending what kind of services you're running as a bank. So for us, of course, the scalability, the functional coverage, what we already have.
Yeah, 5 million accounts.
Basically, yes.
Yeah.
Support of our business model, what we have, and also future potential new products. We looked, of course, the commercials, but at the end of the day, the commercials weren't that different. So differentiating factors came from different other areas. So.
And you're saying it, so listening to you, scalability was really, would you say there was more emphasis on non-functional than functional characteristics?
I think they were quite balanced in a way, because if you're building a new platform, you need to make sure that whenever you roll it out, you meet your existing functionality. Yeah, non-functional, of course, were also important, and then full cloud support as well.
Okay, Dharmesh. So Dharmesh, as I mentioned at the beginning, Dharmesh sold core banking systems for a long period of time. Sell us the opportunity cost of continuing to run an old system. Why would any bank have to make this decision? Because banks have been deferring decisions about core banking systems forever, so why not defer for another year, another 5 years? Make the case for us to urgently replace the core banking system, please.
Wow, that's a difficult one. That's certainly not what I would advocate, but I mean, there isn't really a reason.
Okay, different. If I run a more modern core banking system versus running a legacy system, what things can I do that others can't do?
Firstly, you can scale innovation, as we said.
Yep.
Right. It's not just about the core, but all the processes that surround it, like even credit risk and anti-money laundering. All of these are things that can enable other people to innovate on customer experiences, which you're not going to get out of a legacy system necessarily. There's a cost element which we've talked about, but the cost of losing business is totally underestimated. Right now, we kind of think, well, look, we're sitting pretty on our customer base. They're not going to go anywhere. Well, one of the things I learned 25, 30 years ago when I worked in a bank is that customers don't move easily, right? What they do is create another account and start to do their business there. So they'll keep their old account, but actually do most of their banking in the new place. And that's the biggest risk to banks today, is that they do their new thing somewhere else. And we've seen that already with Starling and Monzo, is that it actually really started out with discretionary spend. You know, my coffee, my tea, I'll put 200 quid in my Monzo account, see if that lasts me the week, and then I'll top it up, right? It used to be what we did out of the cash fund. We take £200 out, right? But as people got more confident with the service, certainly Moniz is one of those ones where actually they've got a high ratio of prime account customers. That's the loss that banks really have to worry about, right? Is, you know, is this the primary place where my customers are doing business? And, you know, if they're only getting like their loan and it's undifferentiated, or they're getting their account, it's undifferentiated, they're probably going to open up somewhere else where it is differentiated. And that differentiation will come from the modern core because of the innovation, but also because of the cost factor. If you look at, you know, how affordable has been for JPMC to scale their you know, headline rates, well, they're doing it profitably, right? It's not giving away money, right? That kind of highlights the need to move to a lower cost income ratio. I mean, cost income ratios in traditional banks are well above the 70s, right? I know Lloyd's dipped at one point, you know, below 50, but they're back in towards 60 again, right? And they still got expensive infrastructures to get rid of, right? So the only other place is the big cost center now is IT. And, you know, nobody should be building anything anymore. What we should be doing is composing stuff, right? Focus on the business, your business isn't technology. This is the thing that I've said consistently for a long time, even when Monzo and Starling said, we're technology business. They're not. They're a banking business enabled by technology, right? And that's what banks should do, really.
Didn't Monzo build its own core banking system? Do you think that's a decision they might regret over time?
It's like many other scenarios where actually at the time there wasn't much choice. So both Monzo and Starling had to build something because they didn't see it in the marketplace, and they did see an opportunity for differentiation, right? And that was lower cost income ratio, platform for innovation, you know, and the ability to scale out, right? Now, if, you know, Tuum and, you know, Vedina and 10x and those guys were around, then I think it's a different decision altogether, right? These players are around now. You shouldn't build core banking now.
And do you think it was like a case of what I think it's Union Ventures says is the app infrastructure cycle, which is as these neobanks started to be created, the infrastructure came in place for anybody to create a neobank at a much lower cost and with better technology?
Yeah, absolutely. That's exactly what's happened. Yeah.
Okay. Any other questions for the audience? Because I'm going to put, oh, there's one here at the front. Amanda, thanks.
Hi, Matthew.
Hi, Matthew.
Quick question, because there's a lot of talk about core banking, but we don't really define what the core really is, right? So you mentioned earlier AML screening, for instance, you know, or onboarding. Is that part of core, or is that something else, right? So what really is the core? So is it just about, you know, the key general ledgers and the account management? And should all of these other things really be other specialized, specific plugins that you put into there? You talked about composable. That's a very good way of explaining it now. So I think, you know, there's a general discussion about core banking, but then perhaps we should define what core really means.
Yeah.
You know?
So Matthew's highlighted a massive omission in the question so far, which is we didn't actually define. Thank you for bringing this up, because at least we will define it before the panel is over. But Ove, why don't you start us off? How would you define a core banking system? Where does it start and stop?
Well, I would use the sort of Gartner definition in that the core banking is sort of mainly the management of accounts, transaction processing of payments, credit facilities and cards, and potentially some other areas. And usually everything else is left outside of it. So that if you talk about AML, KYC, these things are normally outside of the classical core bank, at least.
And onboarding is outside.
Onboarding is outside.
And so to Dharmesh's point, what's really critical is it's such an important system of record that so many other systems query it to be able to do their function properly, and therefore it needs to be real time, it needs to have a proper data schema and so on, right? And a good set of APIs.
Yeah.
And so I guess we come back to this. So to ask the question we asked again, which is like, because we now know what a core banking system is. We discussed at the start what a modern core banking system looks like, but I'm still not sure, and probably many people in the audience are, exactly what differentiates a really good modern core banking system from an average, really modern core banking system. which is Andres. Maybe you.
Scalability, resilience, functionality, and really, if you're defining a quite narrow core banking platform, then I think this is it, but you need in security as well. And ease of integration, because if you build the bank which is modular and you have different service providers doing your KYC, onboarding, credit scoring, whatever, you need to have a really easy way how to integrate and make sure that it really works.
Fantastic. Any other questions?
Can I add to that?
Yes, of course.
I'd say one of the things that is underestimated is flexibility of the platform. So the ability to do things that typically haven't been done in banking before, right? So one of the case studies that I've written about in kind of FinTech Futures around a wholesaler that sold to, restaurants and hotels, right? And they created what they call a kind of an abstracted kind of debit card, right? So their customers who are hotels and restaurants didn't have to change their bank account, but they issued a card for them to spend against, right? And every transaction were then reposted to their bank, right? Why did they do that? Why did they get in front of the transaction? Because now they know exactly where all of their customers are spending their money. They're not interested in the transaction itself, because one of the benefits they gave back was the interchange fee. So the money that they earned for taking the transaction and issuing the card, they shared with their customers. So an immediate benefit over their dealing with their existing bank, right? But the real thing that they got was the customer interaction. They really worked out that actually we don't know where our customers are spending all of their money, what money problems they have as a business, right? But by taking the payment part of it, we really deeply understand them now. And now we can start to look at new products and services that will get us closer to our customers, right? And that's the real power behind some of this stuff, is that, it's flexibility to do this kind of thing that wasn't available before, right? You don't have to be a bank, you don't have to be a credit card company as such, but you could do this thing that gets you in front of the customer interaction.
And I think this is a really good point to end on, right? Which is one of the things I think is most significant about the shift to embedded finance. Is this sounds kind of obvious, but it's really profound, which is it doesn't start with products and services. It starts with customers' needs.
Correct.
And then working back to how to fulfill those needs in the best possible way, which if we then map that onto what a modern core banking system looks like, is all around microservices, right? As you said, it's about being able to compose things in the right form to meet that end customer need. And so we did kind of at a high level talk about microservices, but how does that actually work in a practical way? Of this composability of a modern core banking system. So anybody who wants to take that?
I'll take it if nobody wants to.
You start maybe, yeah.
Look, this comes back to your question, which was about, where does it begin and end, right? But everything needs to be like a discrete service that can be called upon in any sequence or composed upon in any sequence, right? And that's really where we need to be, because it's not necessarily about having an account, but what was the account being used for, and that broader journey. So I can now start to, let's say I'm looking at property management. It's not just about, I want the account because I want to know, like, when rent has come in, when rent has gone out, when bills have to go in, whether it's a capital expense, whether it's an income expense. When am I seeing peaks and troughs in my expenses around the property? It's not the account, but I need to facilitate those journeys based on this account, right? And that's where you want a broader range of services, because now I've got this account. I can also, hold on, I did credit risk for the account, but what about for them taking on the apartment, right? I can use the same model, right? Oh, I have to do a KYC as well, right? So suddenly I'm using a broad range of services facilitated by my bank to be a property manager. I don't want to be a bank, right? But there's a load of financial services bits that I need to facilitate the journeys that, that I want to manage.
Fantastic. So sadly, we are out of time. So let me thank everybody here in the audience for coming along, listening to this panel. for the questions that were asked. And lastly, thank you very much to our three panelists, Dharmesh, Ove, and Andres, for your very valuable contribution to this panel. Thank you very much. Thank you.